Hi, everybody, and welcome. I'm Carl Fisher of CamaPlan. I'm honored to have Elizabeth Cummings with us today, as she'll provide answers to some of the more complex, frequently asked questions concerning IRAs. Beth, welcome today. What if I run out of funds in my SDIRA to complete my investment? What happens?
This, unfortunately, I get this a lot, and I feel like it's a result of not having, reached out to the proper professional ahead of time, and in the client defense, sometimes expenses just come that you don't anticipate. Some folks didn't anticipate, as minor as this sounds, they didn't anticipate the $300 per year that they were going to have to pay Maryland to do business in Maryland. And so they only budgeted a certain amount for their transaction, and they pulled that money in, and now suddenly they've got a tax return that needs to be prepared, so they have professional fees that need to be paid, they have tax that needs to be paid, and now they're whittling away at what they thought was going to go into their investment. And so that becomes a problem. Shifting of assets is very difficult due to prohibited transaction rules. So what we suggest is actually overfunding your LLC initially to avoid this, obviously within reason, but we have had so many clients come to us, I need more money, what do I do? Now, after the initial funding and the formation, like I said, moving money around and adding more to it, you cannot refund your SDIRA. You must somehow get another lending option to provide you additional funds as necessary. And unfortunately, there are also rules in regards to lending. You cannot have recourse debt, and that is what most banks typically offer because they want a personal guarantee. That is another problem. You cannot personally guarantee, and therefore you need non-recourse debt, which is something that is very available, and I think a lot of our clients didn't know that. We have several SDIRA clients that are loaning money from their SDIRAs to another SDIRA, say to perhaps finish their rehab of their property that they had run out of funds to complete. So if you get a private lender and do not give a personal guarantee, there is an option to get more money into your SDIRA. But as I said, you may not refund. You cannot put more money of your own into your SDIRA once it is formed.
Okay. Here's one going back to the tax rate schedule for trusts. It says, can you give us some examples of what would trigger federal taxes on an IRA? So I'm assuming they're talking about unrelated business income tax and unrelated debt-financed income. Mm-hmm. This might be a good time for you to answer that one, Beth.
You got it. Let's do a little definition and maybe some examples. UBIT, or unrelated business income tax, is generated from an IRA that has income from an unrelated business, which seems kind of obvious. But for example, I had a client come to me and ask if he could invest in a laundromat with money in his SDIRA. Well, of course the answer is yes, you can. However, that's going to generate unrelated business taxable income. The reason is that because that is now a trade or business. Now you've entered into trade or business that is more than just saving for your retirement. And furthermore, from the IRS's perspective, you've now gained, the SDIRA holder that is investing in a business has now gained an advantage over the business down the street that has to pay tax on their income. So the IRS said, nope, that's an unfair advantage. We can't let that. So that's why they've created this UBIT issue and the form related to report that income. If you receive rent on personal property that is not real estate but personal property, like a vehicle, furniture, things like that, that generates UBIT, that generates this tax.
That would be like an example. I see that some clients will buy a car and then lease it to an Uber driver.
Mm-hmm. Yes, exactly. Okay. Exactly. That's going to generate that tax. And remember, that tax is that taxable income threshold is pretty darn low. That you're going to be, once you get over $12,000 of taxable income, you're at 40% tax. So not the smartest idea. That is not the best way to run your business. So we certainly counsel people not to do that. One interesting thing that does not generate UBIT is the investment in the rental income from the real estate itself. So if I'm renting out 4 houses in Maryland, my rental income does not generate UBIT, nor does the receipt of dividends or interest income. So I could just simply invest in a corporation and receive my dividends and not have that liability. Now UDFI is a little more complicated, but maybe I will suffice it to say that it is tax that is generated from the sale or the income generation, aka rent received, let's say, from an asset that is purchased with recourse debt. So if I go out and I buy a rental property, but I couldn't fund it all with my IRA, and I end up with a mortgage. Now I have to report when I sell that property or as I receive rental income each year. There is a percentage. There's a formula involved, and there's a percentage that must be reported as unrelated debt financed income because you have received benefit from that mortgage that you received, as opposed to just 100% your assets being contributed. So that's a more complicated calculation, and but it falls in the same tax bracket as the UBIT, so we sort of lump it in that same discussion so people understand.
Great. I think that those are good things. Again, let me remind people that I think Wayne talks about these different things on the website under Checkbook LLC.
He does, and he goes into much more depth, I believe, in that regard. And again, we're actually structuring a deal right now with several SDIRAs involved, and it's actually required a flow chart, if you will. There's a whole whiteboard session going on just to watch the money flowing from entity to entity, finding out where the financing is going to come in, and he's very good at that. And he and I kind of get together and brainstorm the tax and the legal side together. So it's kind of nice that we're under the same roof. We can coordinate together, and the client certainly will know the both of us by the end of the transaction.
Hey, Beth, thanks a lot. As always, this information is for educational purposes only. Each individual's circumstances can be unique. This webinar should not be considered as rendering tax, legal, accounting, or investment or other professional advice. If tax or legal, accounting, investment, or other similar expert assistance is required, the service of a competent professional should be sought.
Great. Thank you so much, Carl.